Yes, so welcome to this market breakdown. Yeah, so in the previous weeks, we've been looking at how the dollar has been strong, and then we also looked at other pairs. Yeah, so if you've been following these videos from the very beginning, you will realize that last week we had talked about, we had analyzed the Euro-USD pair from the weekly perspective, and this is what we had as our structural low. And we had anticipated price to come all the way up to this region, then also another low here. So as we talk now, what we had analyzed has actually happened. Price, this was the other week's candle close, and then right now we see this market testing the previous lows of the other candles, and then we see price coming down all the way up to here. So as we talk now, price is at what we shall call our support area. Yeah, so this we had discussed it in length last week, so you can watch the other video. So right now price is at our it's at our support areas. So but in these support areas here, we shall have to see whether there will be a possibility of this support holding price. If there is no possibility of price being held, then there is a tendency for the market to break this and continue with the dollar strength. We had talked about the dollar strength, and that's why the dollar is actually heading down. We looked at it from the bigger time frames, which is the monthly time frame. Just to remind you, we've been analyzing the market from the monthly time frame, and in the monthly time frame, we had clearly stated that the dollar is strong across all pairs. We had looked at the DXY, the DXY. But now, if you see this, the strength of the dollar is still massive on the monthly time frame. So there's a possibility of the market coming all the way up to these lows to test this support. So with that being said, it's very important for you to understand that from a bigger picture. So this level, which is now acting as our resistance area, should the market be able to return to these areas or these daily highs, we can begin to look for selling opportunities to continue further the dollar strength. But as we talk now, the market is at a very good support area, which we will not want to tamper with. We just want to see if this support is not broken, if we get a double bottom here, then we can have a chance. You can have a chance of the market pushing up, but that's the case, we know the dollar is strong. So it's also very important for us to understand what really moves the market. While we always focus on the technicals, it's also important to understand the bigger picture from the fundamental side and what really moves the market. So just to break it down for you before we can go into other pairs, you need to understand what moves the market. And the moment we understand what moves the market, it will be easy for you to know where and how you're going to be trading from. So the first factors which move the market, of course, is what we call like the demand and supply factors. So any currency in the world, regardless of where it is moved by the factors of demand and supply. So the factors of demand and supply determine the strength or the weakness of any particular currency. I give you an example. If I pick the idea of petrodollar, and then I try to use the understanding of petrodollar in determining the strength of the dollars, you realize that because of the demand for the dollar pair, for the dollar as a currency, because it is one of the most globally used currency. If you just pick an example of the petrodollar, whereby an agreement was signed between the United States and the Arab oil producing countries, whereby they will be able to protect them militarily And then in exchange, the dollar will have to be bought using, the oil will have to be bought using the US dollars. So in that agreement, that already creates a demand for the dollar. So each time somebody wants to buy oil in most of these countries, they will have to exchange their local currency. They will have to buy the dollar and sell their local currency, and then they go and be able to purchase oil. Of course, as we talk now, there are many factors which are beginning to play in, including the BRICS and all other factors, but still the dollar preeminence is still at existence. So what does that mean? It means that because of the demand for a dollar, if I want to purchase some barrels of oil from the oil producing countries, I have to sell my local currency, and then I have dollars, I go buy that creates that demand. So that is one of the reasons that makes the dollar generally strong. And if you look at that, that also works for all currencies in the world. Any currency that is stronger than the other one is because they have a demand factor that is being engaged there, and that makes the currency stronger. So, and then the other factor which also moves the Forex market that we shall need to understand is, in addition to the demand and the supply factor, which I just gave you an example, we will go in length into that. The other factor that moves the Forex market, in addition to demand and supply factors, we have the sentimental. Sentimental. So let me put it sentiment. Sentiment and psychology. So you have the sentiment. You have sentimental factors and then psychological. So what do I mean by that? Now, the positioning of other traders in the market does play a big role in the strength and the weakness of that particular currency. By sentimental here, we clearly understand how other traders are positioned. What are their bias in terms of the strength and weaknesses of that particular currency that is being traded? Give an example. How many traders are long on the dollar and how many are short on the dollar if you pick a pair like GBPUSD, the pound dollar? So the result of that positioning, which was sentimental, it determines even the smart money plays. Where is the money headed in? How many people are long and short in this particular currency pair? And because of that, you get to realize now, psychologically, other people will want to tag along the big money or the smart money concepts. And because of that, that leads to the movement of the currency pair. And that, if you combine that with your supply, demand factor, sentimental, and the psychology, you get to understand exactly what direction the market is taking all the time. And then for you to be able to get to know and understand more about sentimental factors, you just need to be able to download or look at this, the Commitment of Traders report, which is released every Friday. You can access it online, and then you'll be able to understand how many traders are long, how many are short on these particular pairs. So you get to understand that more. And then maybe the other factor which also moves the market, which will be the technical data and the technical data. So this is the other factor which does move the market. So the technical data, this is where we get to have our monthly, yearly release of micro and macro data. And these data are usually, let me say, if you have data like CPI, Consumers Price Index, you have data like unemployment rate, you have data like housing policies. So these technical data, they have a big influence on how the currency is strong or weak in regard to how it is being just played out throughout the month. So I give you an example. Every month we have CPI, we have other technical data is coming out. I just take you, for example, if I just come to this coming week and then we look at the technical data, that we will see how it's going to drive price. So when you look at Monday, 18th, if you look at 18th, there's definitely no big technical data being released. We have a medium, but then on Tuesday, we have the Aussie, the Australian Monetary Policy Meeting. This is one of the technical data that we know will be able to move the currency of the Australian currency. And that is that technical data we need to measure. On Tuesday, again, by 3 p.m., we have the Canadian CPI, Canadian Consumer Price Index on the monthly basis. So this is another factor which will move the market. And then on Wednesday, we have the Chinese, I think, and then we have the pound CPI yearly, like that. So these are some of the technical data that move the market. So once you have a clear understanding of these three factors that move the market, you can be in a better position to trade now. You will know exactly how you would want to trade and all of that. So applying all these three factors to the strength of the dollar, you realize the dollar is strong because there is a high demand for the dollar as we talk now. And then sentimentally, many traders are positioned on the strength of the dollar. And then technical data will have to follow this suit. So once you understand it, you can be able to trade with the proper knowledge and not just gambling in the market. Okay, so if you keep following these videos, I'm sure you will learn more. So this is what we have on our on the dollar pair. So that means if you understand from these three factors, what you will need to do now is to be able to know if we get a double bottom here on the dollar, that means we can temporarily look for long positions, meaning we cannot swing or we cannot be able to hold this trade for a number of days. We can just take, if you're doing intraday, if you get a double bottom here, you will have to take your profits at the nearest high and then watch if the market is able to bounce all the way to this support, to these resistance areas, and then we can look for other trading opportunities. So let me go to another pair and look at it from the bigger picture. So that is our positioning on the dollar. So let's get to pounds. Let's see how the pound is playing out on the bigger picture, which will of course be the monthly, the weekly level. So since we have Australian technical data coming in, it will be wise to look at the chart. So starting again from the monthly, which we always emphasize, if you look at the monthly chart, the pound has generally been stronger than the Aussie. But as it continues to be stronger than the Aussie, you realize if you look at this level here, this is our, what we would usually call our supply area, whatever it is. So we have this area where the market is failing to break, or to better put it in a simple term, we have this area of resistance because we have a previous high here. We have this area of resistance, which the market failed to break. This market came down, bounced again, come down. And then when the market came into this region, you see price being rejected. So price had pushed up, but it was being rejected. The candle closed below this resistance area. And then if you look at this, this is where we had our break of structure. So definitely we are trading between this region. And as we trade between this region, we need to know exactly where the monthly lows, the weekly lows. So this is our monthly low, or what you will have to, we can say this is our monthly low also. And then we also have this. So for now, we will be concerned about this. Will price come to this monthly low and then to this before it can come all the way up to this? For us to understand it better, we need to come to the lower time frame. So if you look at the weekly time frame, this is what we have. A nice candle break, a lot of momentum telling us the Aussie strength is already in play. So this is the monthly resistance area we had, where market broke above it and then faked out. So market breaks above this level, looks like it will come and retest this to continue, but then it breaks back inside. So generally we are seeing strength of the Aussie pair. So as we look at the strength of the Aussie pair, where shall we get a reaction? So the first place we can easily get a reaction from will be the previous monthly low, which is this area. We have about how many pips? About 170 pips to reach to that low. But then we have this area where the market broke, which will act as our resistance. So you realize that the previous resistance, which was faked out, has become again another resistance in case the market pushes back to this area. This will also act as our resistance. We look to sell it possibly all the way to down here, as long as these areas get broken. So with that being said, we can go now to our daily time frame. We look at that. So the daily perspective, we want to see price bounce all the way to this region, or will price be stopped around these areas? That's what we shall have to see. And then once we have that, we can come to our low monthly time frame. So the best place for us to be able to take trading opportunities are either around this resistance, these areas, and this. So right now, price is hanging in the middle, so it will not be so wise to take a trade from that. Okay, so that is what we see on the Aussie. So we've looked at the dollar. We understand exactly some of the factors that move any currency pair. And then also, we looked at the pound pair. So we can go to one more pair, which is not related to this, which would be, because we have the Canadian CPI coming on Wednesday this week. So we will have to look at some CAD pairs. So for that case, let me just pick NCAD. So we need to look at NCAD. How is NCAD playing out on the bigger picture, and then how we can be able to take some trading opportunities on the NCAD and capitalize to make some money throughout the week. So if I go again to my monthly chart, what do we have? So on the monthly chart, you look at this was our monthly resistance area. This is where the market was able, because we had a high here, market coming to form a fresh low, which will act as our support area here. And then the market bounces back into this region and fails to break this. So this becomes our resistance area. So now we know we are trading around this area. And as we trade around this area, begin to see the previous monthly close was here. So this was the low of the month. And then when we come to our daily chart, weekly chart, we want to see how did the weekly candle close. So if you look at the weekly close, this was our weekly, previous weekly high, where the market actually failed to, this candle was able to fail to reach to this level, leaving us with this weekly high, which will now act as, hey, we're on the daily chart. So let's come to the weekly. So on the weekly chart, this is our, this will be our, so our weekly high. Okay. And we're expecting price to come all the way up to this, at this monthly lows, which is our support area. But when you just look at this from the bigger picture, that tells you clearly the Canadian dollar is stronger than the New Zealand. And in most cases, the Canadian dollar is actually stronger across all pairs. So we have our weekly high, which is that. When we come to our daily, we want to see how will price be able to reach to this weekly highs to form a resistance? If yes, then that is good. If not, we still have another important areas here. See this area here, which the market is failing to break for a long. If you do it like that, you will see it clearly, but that is also another resistance area. And then finally, when we come to our forward time frame, this is what we have. Okay. So you can see clearly these lows have been broken. These lows have been broken, the previous lows. So this is also another resistance area, another support, an area where support has become resistance. So with more confirmation definitely here, when we get the confirmation we need around this region, we could take a short. If the market passes through, then we'll have to wait If it breaks above this, then we have these areas to wait for price, and then these areas. Yeah, with that being said, we exactly know that the Canadian dollar is strong, and therefore all we have to do is to position ourselves together with the other traders, which are positioned by demand and supply factors, by sentimental and psychological factors, and then also by the economic data that we have. All right, with that being said, let's move to a yen pair. Can move to yen pair. So now we have a perfect understanding of the dollar. We have an understanding of the Canadian and then of the Australian dollar. Let's get to a yen pair. Yeah, so GJ, one of the most traded pairs, GBPJPY, to understand the overall direction of the JPY pair. We want to see how the JPY. So let me use FXCM data to be able to break it down for us. So let's go to the highest time frame possible, monthly. So on the monthly chart, if you look at it on the bigger picture, the market is generally trending to the outside, meaning the pound is stronger. The bigger picture, with this as our most high resistance area, meaning when the market reaches this resistance area, there will be a possibility of a big downtrend, which will lead to the yen, strength of the yen. Okay, but we haven't reached that level yet. So if you look at this, this is another area of break. So now we define clearly where we're trading from, and then don't forget these resistance areas here, these areas, because you see price, this is an impulse correction, and then another impulse to the downside. So once we have that, we can begin to zoom in clearly so that we can understand price more precisely. So this is our monthly, the week monthly low, and then we also have our monthly high. So when we come to the weekly, we know we are trading around here. So there's a possibility of the market coming all the way to retest this support area before it can either bounce off or break to come for this next support area. If you look at this candle, this is a nice strong momentum candle with a break to the upside, and then price fails to go further when it reaches this high. So there's a possibility of this area being filled. If you look at this, there's an area of imbalance here, and the market is likely to come down, fill this area, and then we begin to see what will happen, whether we can break this to come to this or we continue to go up. Then on our daily, let me just do this. So this is our weekly high. So this weekly high will act as our resistance if price reaches there. So is it reaching there? If you look at price from this perspective, the tendency of price to reach there may not be possible, because what is happening here? If you study it here, you will see price. This was a high, price created, price comes, forms a low, and then from this low, we have failure, a fake out, where price broke, seem to have broken this and then breaks back in to form a new low. So we have been seeing this movement. What does it mean? The market is failing to break the previous highs. Okay, these highs are not being broken. So as market fails to break previous high, what does it mean? It means there is a downtrend. This is a clear downtrend, because what are the characteristics of a downtrend? Let me just explain this to you. So the characteristics of a downtrend is, just characters of a downtrend. There are majorly two. One of them is failure to break previous highs. Failure to break previous highs. And then the second one is constant break of lows. So once you see this, when you're trading, you just need to know When you see this, you need to know the characters of a downtrend. Okay. So what will tell you that the market is trending to the downside? These are the two things. Failure to break the previous high. So this was our previous high. All right. So if this was our previous high, because the market went up here, formed this high, and then comes down to form a low. So when price was going up, it could not reach this high. So in other words, it failed to break this high. That is the characteristics. But then it broke this low. Okay. So this low is being broken, and the market fails to break this previous high. So we have this high and we have this low. So if you look at price broke this low by this. Okay. And then went up to this high, fails to break. So this broker feeds have gaps, but don't worry about these gaps. This is just a strong break to the downside. Yeah. So another factor you need to also, if you're using TradingView, you can switch between these different data feed. This is FXCM. You can go to Awanda, you can go to Pepperstone and others. So these highs, this high is failed to be broken, and then this low is being broken, and then we have again this high not being broken and this low. So what am I saying? Characters of a downtrend, these highs is a failure to break the highs. This high is not broken by this. This one is not broken by this. This one doesn't break, and then another high. And then the lows, constant break of the lows. These are the lows being broken here, and then this low being broken here, this low, like that. So now that means an area, this will be our high. So there's a possibility of the market not reaching here. So this is what will begin to happen. So you don't want to jump in now. Where do you get your entries? Where you have the best place to have your entries is at the highs. All right. You don't want to have entries at the lows here unless you're buying. You remember the golden rule of investing that everybody always says is that you want to be able to sell. You sell high as possible, and then you buy low. So these are the areas in which you begin to look for these sells. You look at for your candlestick characteristics around here, these areas. So these are areas where you look for the sells, and then the buys. So you're buying low, you're selling high. Okay, so that is that with some of the pairs and what we're looking at this week. So I want to wish you all the best. Yes. Have a good day.